All right, let's dive in. Today we're looking at Ncino.
Yeah.
They're this cloud banking company, but they're really, really pushing this AI banking thing lately.
Hmm.
So we've got their earnings call transcript here
Yep.
from the fourth quarter and the full fiscal year 2025.
The latest.
We're going to be hearing from Harrison Masters, Sean Desmond, he's the new CEO,
Okay.
and Greg Orenstein, the CFO.
Got it.
Plus, we've got their earnings release right here.
That's right.
And our goal, as always, is to kind of break this down for you, the listener, really highlight what's important, cut through all that jargon, the financial stuff.
Exactly. We've got kind of the full picture here.
Yeah.
We've got what the company's saying, what the analysts are asking them. We've got the hard numbers.
Yeah.
So we really want to give you a clear understanding of how they've been doing, where they're going, especially with this big focus on AI.
Right.
And what factors are shaping their expectations for the future.
Yeah, and I think one of the things I'm really interested in is they talk a lot about, their customers in the market.
Oh, yeah.
And, what they're seeing out there. So that'll be really interesting to kind of dig into as well.
That's always good context.
Yeah.
All right, so where should we start?
So let's start with the financials. Just the core, for Q4 and the fiscal year 2025, which ended in January.
Mm-hmm.
So total revenue for the fourth quarter, they hit $141.4 million.
Okay.
That's a 14% increase year over year.
Solid.
Yeah. And then for the full year, they brought in $540.7 million,
Right.
which is a 13% growth year over year.
Healthy growth.
Yeah.
Now, if we get a little more granular and look at subscription revenue,
Okay.
which is super important for a SaaS company like Ncino,
Yeah.
that's the lifeblood.
Right. It's recurring.
Recurring revenue.
Yeah.
So that also saw some really good growth.
Right.
In Q4, it was $125 million.
Right.
A 16% jump compared to the year before. And for the full year, it was $469.2 million.
Yeah.
A 15% increase.
Really strong.
Yeah. And what's even more impressive is their organic subscription revenue growth.
Right.
Meaning the growth that's not coming from just buying other companies.
Yeah, just their core business.
Exactly.
Yeah.
So that was 10% for Q4 and 12% for the full year.
Wow. That's really impressive.
Yeah, so they're definitely doing something right there.
Yeah, and I think one of the things that really jumps out to me is their profitability.
Yeah.
Their non-GAAP operating income really saw a nice increase.
That's sure.
So in Q4, it went from $19.3 million to $24.4 million.
Okay.
But the full year is where it's really impressive.
Okay.
It jumped from $61.8 million in fiscal 24 to $96.2 million in 25.
Wow.
A 56% increase.
That's huge.
Yeah, it's really significant.
Yeah, that's a big jump.
Yeah.
Seems like, those earlier investments they've been making are really starting to pay off.
Yeah, you think so?
Probably because, customers are sticking around. And maybe they're getting better at managing their costs as they grow.
Mm-hmm.
That's what you want to see from a maturing SaaS company.
Yeah. And you know what else signals confidence?
What's that?
Their board authorized a stock repurchase program
Oh, yeah.
up to $100 million.
That's a good sign.
Yeah. I mean, it basically says, hey, we think our stock is undervalued.
Right.
And this is a way to return some value to our shareholders.
Exactly. A good move.
So a big change for Ncino is the new CEO.
Right. Sean Desmond.
Sean Desmond, yeah. So this is his first earnings call as CEO.
First one.
But, he's been with the company for almost 12 years.
Okay.
He's been the chief product officer, chief customer success officer. So he knows this company inside and out.
Yeah, he's not a stranger.
Not at all. And he knows their products. He knows their customers. I mean,
Wow.
they've got a really diverse customer base.
They do.
Big banks, credit unions, mortgage lenders, you name it.
Really running the gamut.
Yeah.
Oh.
So what's interesting to me is his strategic focus.
Yeah, where's he taking him?
He's really saying, Ncino, we're a leader in cloud banking, but we're going to be the leader in AI banking.
Interesting.
Yeah, now this isn't like a totally new thing.
Right.
He said they've been focused on data analytics and AI for the past 5 years.
Okay.
He even mentioned some of their existing solutions, like they've got tools for commercial pricing and profitability, automated financial statement spreading, and portfolio monitoring.
So they've already got some AI in place.
Yeah, and he really emphasized that,
That their foundation.
Yeah, and if anyone's listening who's planning to go to their Nsight user conference in May,
Yeah, I heard about that.
it sounds like there's going to be some big AI announcements.
Really?
Yeah, he mentioned they're going to launch some new banking advisor capabilities,
Interesting.
which I think are these new AI-powered tools.
Sounds like it.
And they're going to share some early customer experiences.
Okay.
You know how they're using these tools and what kind of results they're getting.
So, real-world examples.
Yeah, it really seems like they're going all in on AI.
Yeah, I mean, it makes sense,
Yeah.
right? The financial industry.
Yeah.
Yeah, they're still catching up on technology in a lot of ways.
Mhm.
And AI has so much potential to, automate things.
Right.
Make better decisions with data.
Yeah.
Improve the experience for bank customers.
Yeah. Yeah.
And, Desmond's been at Ncino for so long.
Mm-hmm.
He probably has a good idea of what their customers really need.
Yeah, where the pain points are.
Exactly.
Now, it wasn't all sunshine and roses on the call.
Right.
Desmond did address some of the challenges they've been facing.
Okay, what were some of those?
Well, he mentioned the macroeconomic headwinds.
Yeah.
The crazy interest rate hikes we saw in 22.
Mm-hmm.
The liquidity concerns in the banking sector earlier this year.
That makes sense.
Yeah, all that stuff definitely had an impact on their sales.
Yeah, can't blame him for that.
No. And it wasn't just external factors.
Oh, really? What else?
He talked about some internal challenges, too.
Okay.
Like their consumer lending product launch was slower than they planned, and they had some issues with onboarding new customers after they acquired DocFox.
Oh, right. They had to integrate that platform.
Yeah, and I think they might have been a little too optimistic about interest rates dropping and boosting mortgage activity.
Yeah, that's been a tough one for a lot of companies.
Yeah, and they even admitted that their sales execution in some international markets wasn't great.
Specifically Europe.
Maybe Europe, yeah.
It's interesting that they were so open about those problems.
Yeah, I mean, I appreciate the transparency.
Me too. It shows they're being realistic.
Yeah, but they didn't just, point out the problems.
Right.
They talked about what they're doing to fix things.
Okay, good.
So they made some leadership changes in Europe.
Who did they bring in?
Joaquin de Valenzuela is the new EMEA general manager.
Oh, yeah.
They've got new leaders in sales and marketing.
Right.
And they hired a new AI Catalyst chief technology officer.
Wow, they're really serious about the AI.
Yeah, his name's Will Jung, so it seems like they're making some big moves.
Yeah, trying to get back on track.
Yeah, so why are they so confident about future growth?
Yeah, that's a good question.
I mean, despite all these challenges,
Yeah.
Desmond really believes that the next decade is going to be huge.
For them specifically, or just
For them,
like
okay,
everything?
because he thinks, all these financial institutions, they're still using these old, outdated systems.
No, yeah, legacy technology.
Yeah, and it's just so inefficient.
Right, they've got all these separate systems, data all over the place.
Yeah, and he gave some examples of how things could be so much better.
Okay, what did he say?
Like onboarding new commercial clients. He said that can be a real nightmare.
It can be a long process.
Yeah, and then monitoring loan portfolios for risk.
Right.
Making account opening really easy. And using AI for mortgage document processing.
So a lot of areas where they think they can help.
Yeah, and they're saying, we're the only ones doing this.
What do you mean?
They're saying they're the only cloud-based SaaS provider globally
Right, okay.
that handles the whole loan life cycle.
From start to finish.
Yeah, application onboarding account, opening portfolio management, all on one AI-powered platform.
Wow, that's a bold claim.
It is, and they're doing it in over 20 countries.
So they're not just a U.S. company.
Nope.
So they're really emphasizing this integrated platform.
Yeah, it's central to their whole strategy.
Yeah, and they kept talking about how they're embedding both generative and agentic AI.
Right.
Generative is like creating new content. And agentic is like AI that can actually take actions on its own.
Yeah.
And because they're basically a system of record for their customers,
Right.
they have all this data that they can use to train their AI and really help these financial institutions be more efficient.
Yeah, and they gave some really specific examples.
Okay.
Like they said, AI-powered document validation for U.S. mortgages is saving loan officers like 40 minutes per loan.
Oh.
Yeah, and continuous credit monitoring is eliminating hours of manual work.
That's huge.
Yeah, and their tax statements 3.0, which uses a large language model,
Okay.
is saving 15 to 20 minutes per statement.
That's a lot of time saved.
Yeah, it's really making a difference.
And what about that sandbox banking acquisition?
Oh, yeah, that seems like a key part of their AI strategy.
How so?
Well, they're creating this unified API layer.
Yeah.
which basically means they're making it easier for all these different financial systems to talk to each other.
Oh, I see. So it's like a universal translator.
Yeah, kind of. And that's going to be really important for their banking advisor AI tools for deploying these AI-powered agents.
Okay.
And for managing all the data that their AI relies on.
It's like the foundation for their AI ecosystem.
Exactly.
So it's not just about the AI, though, right?
Right.
They're still focused on their core business, too.
Yeah, they really emphasize their strong reputation in commercial banking.
They got a good name there.
Yeah, they call it the gold standard.
Yeah. And that's helping them get into other areas.
Yeah, like consumer lending, small business banking,
Okay.
mortgages.
So they're diversifying.
Yeah, they said over 70% of their total addressable market is outside of commercial lending.
Wow.
And more than half of their new business in fiscal 25 came from these other solutions.
So they're not putting all their eggs in one basket.
Nope. And they're really focused on, disciplined execution.
Right.
Making sure their products are what the market actually needs. Growing revenue while being financially responsible.
Makes sense.
And providing a great customer experience.
So they're covering all the bases.
Yeah.
So what about their actual progress?
Yeah, so they're seeing some good signs.
Like what?
The ACV growth in fiscal 25 was 9% organically.
Annual contract value.
Yeah, basically how much their subscription contracts are worth.
Okay.
And it was 13%, including acquisitions.
So pretty good growth.
Yeah, and they had some wins in Europe. They
Right.
got a big deal with CSOB in the Czech Republic. And another one in Japan.
Nice.
And their consumer lending business is picking up steam.
Good after those early hiccups.
Yeah.
What about the impact of those acquisitions?
Yeah, they're really optimistic about DocFox, Full Circle Allegro, and Sandbox Banking.
They think those are going to pay off.
Yeah, they're saying those acquisitions will boost their financial performance and expand their total addressable market.
So a good long-term move.
Yeah, and they're not planning any new acquisitions in fiscal 26.
Okay.
They want to focus on integrating the ones they've already got.
That makes sense.
They also mentioned that the macro environment seems to be improving.
Yeah, that's good.
Yeah, their customers are saying their balance sheets are healthier and they're more optimistic about growth.
So things are looking up.
Yeah, and there's even talk of deregulation in the U.S.,
Oh, interesting.
which they think could lead to more banks adopting technology.
Makes sense. Less red tape.
Exactly.
Okay, so what about their specific financial projections?
Yeah, so for fiscal 26, they're expecting total revenue between $574.5 million and $578.5 million.
All right.
That's about 7% to 8% growth.
Right.
And for subscription revenue, they're guiding for $503 to $507 million,
Okay.
which is 8% growth.
So solid, but not spectacular.
Yeah. They're also projecting their ACV to increase by $48 to $51 million.
On a constant currency basis.
Yeah, so that's a 19% organic net ACV bookings growth.
Okay.
And they expect non-GAAP operating income to be between $107 million and $111 million, a 13% increase.
Okay.
And non-GAAP net income per diluted share should be between 66 cents and 69 cents.
Excluding currency fluctuations.
Yeah.
So they're projecting continued profitability.
Yeah, and they expect their gross bookings growth to accelerate throughout the year,
Okay.
which they think will lead to even faster subscription revenue growth in fiscal 27.
So they see this as a bit of a stepping stone year.
Yeah, and they're also anticipating steady operating margin expansion in the second half of the year. And they're aiming to hit that Rule of 40 milestone by Q4 of next year.
Yeah, that's a key benchmark for SaaS companies.
Yeah, it means your revenue growth rate plus your profitability margin should be around 40%.
So a good indicator of overall health.
Yeah, and the CFO, Greg Ornstein, he gave some context for the subscription revenue guidance.
What were some of the factors there?
Well, they're expecting about a 1% hit from currency exchange rates,
Okay.
and they're being cautious about mortgage growth in the U.S. They're not projecting any increase in their U.S. mortgage subscription revenue.
So playing it safe there.
Yeah, and they had some one-time subscription revenue in the second half of fiscal 25,
Okay.
which will impact their growth rate by about 3% in Q3 and Q4 of this year.
Okay.
And they're being more conservative overall with their guidance.
So not getting ahead of themselves.
Right. So they're expecting more of their bookings to come in later in the year.
Makes sense.
They're also planning to increase their sales and marketing spend by about $10 million.
Where are they focusing that?
On the U.S. credit union market, emerging markets in EMEA,
Okay.
Japan, and digital marketing.
So pretty broad approach.
Yeah.
Now, what about their customer retention?
Oh, yeah, that's actually really good news.
What did they say?
Their ACV net retention rate increased to 106% in fiscal 25.
Wow. Up from 102% the year before?
Yeah, so that means their existing customers are not only staying,
Right.
but they're also spending more.
Yeah, it's a great sign.
Yeah, and churn is decreasing.
So less customers are leaving.
Yeah, their total churn was down to 26 million in fiscal 25 from 31 million the year before.
So they're doing a good job at keeping their customers happy.
Yeah, and of course we can't forget about that $100 million stock repurchase program.
Right. That was a big vote of confidence.
Yeah, and Sean Desmond, he made it clear what he's focused on.
Okay, what are his key metrics?
Gross bookings, growth, hitting those rule of targets, and increasing free cash flow over time.
So growth, profitability, and cash flow.
The trifecta.
Makes sense.
So to wrap this up, Ncino had a decent year. They're definitely transitioning to this AI banking focus.
Yeah, Sean Desmond's putting his stamp on the company.
Yeah, they've been open about their challenges.
They have.
But they're taking action to fix things.
Right.
And they're optimistic about the future.
Which is driven by AI and expanding beyond commercial lending.
Right.
Yeah, it's interesting to see a company kind of reinventing itself like this,
Yeah.
admitting their mistakes, but also being really strategic about the future.
Yeah.
It's not going to be easy,
No.
but they seem to have a plan.
So one last thought for you.
Okay, hit me.
You know, all these financial institutions are trying to figure out this whole AI thing.
Right. It's the big buzzword these days.
And Ncino is saying, hey, we're the partner you need. We've got this unified platform.
Yeah.
We're all about AI.
So what do you think the biggest obstacles are for these banks?
Yeah, like what are the things that are really going to hold them back from adopting AI?
And how can Ncino help?
Yeah, is their approach going to be enough?
I mean, it's a huge opportunity,
It is.
but it's also a really complex challenge.
Yeah. This whole sector is ripe for disruption.
Absolutely.
Thanks for diving in with us.
I enjoyed it.
Always a pleasure.
Yeah, till next time.
All right, see you. Bye.